Hi again, everyone. I hope you're all doing really well. So it's another sort of flat to dismal day for Mullen Automotive. While there was a bit of a midday rally, the stock, as we edge towards the end of trade, looks like it's going to close in the red by about 2%. Obviously not what Mullen stockholders want to see, but I guess given what's coming up at the end of the week, it's not altogether surprising. We've obviously got the shareholder meeting where there's going to be the vote around the reverse stock split. I spoke a bit about that yesterday. I'll just reiterate the main point that I always thought that, like, when they did that second reverse stock split, they should have just gone really big with it. Yes, it would have wiped out shareholders at the time, but there was actually a better likelihood that the stock would have stayed elevated above the price that they wanted to, and they wouldn't need to be going down the path of a third reverse stock split in under 12 months. And that kind of takes away any sort of leeway they have with the Nasdaq in terms of if the stock was to fall back below $1, because they'll be beyond the one for 250 or whatever the max the Nasdaq allows them to be, or one for 225 in a 12-month period. So I won't talk about that too much, but yeah, it's quite understandable. Now, I've read comments that you guys left. There's a lot of people out there, pretty sure that the reverse stock split is going to go down. I agree. I don't think it's going to make sense to not vote for it, just in terms of shareholders valuing the company as staying listed. Now, obviously, if they do go down the path of a reverse stock split, it means a lot of smaller holdings who have been who have had their stock count shrink over the last year through the two reverse stock splits. If they had 225 shares, they've only got one left now. Any stock split now, if you're in that position, you've got one share which is worth like 13 cents, is likely just to wipe you out altogether. And I think that's the reality of what we're facing. There's going to be a lot of small holdings wiped out. Depending on the number, I think I might still have some. I'll still have a little bit of a holding, actually, I should say, because I have been trading and I have dollar costed average my position a few months ago. I'm still sitting down by about 80% or 75% or something. I'd have to double check that. It's not a big holding I have. It was a bit of a gamble play at the start of the year. I kind of started looking at the video. I started making videos, started looking at the stock, and so I thought I'd take a little bit of a plunge and it would help me stay interested in the stock. It has. Hasn't been rewarding. It's definitely been a bit of a drag on my portfolio, but it's not a big position, like I said. It's right now, well, the dollar value of it now is like less than 0.5% of what I own, all up in my portfolio. But yeah, it's still like it got a very big red number about being down next to it. If you have a bit of a diverse portfolio in stocks, hopefully you've got something that's balanced that out over the years. Mine's been Nvidia. I've been holding this for since last year, and I was contemplating selling it this year when it raced up to 300. It's crossed the $500 mark and come down a little bit since then, but I'm still holding that. I was very close to actually selling it, and that position is actually elevated quite a lot. And yeah, I still don't know what to do with it. Like, I don't know how much longer their big run is going to last. A lot of the analysts are saying it's going to run for a lot longer, but anyway, that's neither here nor there. We'll talk about Mullen Automotive here. The one other thing sort of came to mind is I do watch other YouTubers out there, and Business Dad, he's obviously one of the regular people posting about Mullen Automotive, and he was talking about him being concerned about obviously the number of shorts returning, as well as the lowering cost to borrow for shorts. This isn't altogether surprising. Shorts, even though they want to see the company do poorly in terms of share price performance, obviously Friday's presenting a bit of a catalyst event no matter what. So there will be a bit of risk hedging there. So I wouldn't be surprised to see some shorts returning. That's a given. Even though there's a very likelihood that we're going to have a reverse stock split and then perhaps some further erosion of share value after that. But shorts will be hedging their bets before Friday, I think, to an extent, not all. And the other thing, obviously, the cost of borrow is going to go down. It's not very hard to replace a Mullen share that you've borrowed at the moment. The price is so low. It is what it is. That's kind of what's going on with the shorts. I'm not, I wouldn't be reading into it too much. Now, like, the reality is this stock's not going to get up to $1 organically by Friday, as David Mitchell had hoped. It'd be interesting now if they had deployed the whole $25 million stock buyback, like, on the last day, just to see what it would take the stock to. Because when you look at the you know, the market cap, we're only sitting at around $50 million as a market cap. So $25 million to be buying back half of your stock, and that might actually get the stock price close to that $1 mark, at least for now. But yeah, anyway, just another thought. Anyway, so I'll leave it at that. It looks like we're going to have another down day. Not surprising. Continue to share your thoughts. You know, I'm loving hearing it. I know obviously there's pretty much a consensus that we're going to have the reverse stock split on Friday. There's a number of you who think we're going to actually be delisted come February next year. We'll have to see. You know, and there's a number of you that actually want to see the stock go over the counter and avoid the fluctuations of the market. You know, doing a huge reverse stock split and going over the counter, in my mind, are going to actually have a very similar effect. It's going to basically take out a lot of liquidity in the stock. The difference is the reverse stock split is probably going to hurt more individuals, in the sense that there will be a number of small people who get wiped out of the stock altogether. But over the counter, a lot of those individuals are going to find it very hard to actually trade their stocks. Not that I've ever had a share that I've traded over the counter, but from what I understand, it's very hard to actually deal with that. And yeah, so it's obviously a place where the company probably never envisioned being and doesn't want to be, but it's really a pathway they could be looking at. It's interesting. I know I'm rambling on a little bit here, but it's interesting that, you know, like a company that's so, you know, it's an upstart EV, it's especially quite exciting new technology coming out, and so much of the focus is just on the actual financials and the performance of the stock, which is obviously come to be expected for, you know, any sort of company that's publicly listed, but it's really taken away from the focus of the work they're doing. But in terms of the work they're doing, there's also question marks around some of the quality of some of their products that they're putting out too. Yeah, but I'm not going to go into that now. Yeah, anyway, share your thoughts on what you think is happening with Muln Automotive in the comments below. I'll try to keep doing these regular updates. I've been on a bit of a roll lately. Yeah, until next time, everyone, may the markets trade in your favor. Cheers.